Canada's inflation numbers are down, yet 5-year fixed rates are up slightly. And our new construction homes, are they piling up? Are we seeing months of inventory increase? All this and more with our good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Hey, Gary. I'm great, man. How are you?
Excellent. Excellent. The sun is shining. March is around the corner, which means spring is coming soon. This is all good things. All
What
good
did the
things.
groundhog say? I missed the groundhog. What did he say this time around?
I have no idea. Just that. Is it he sees his shadow or doesn't see his
And
shadow?
then
I don't
if he
know.
sees his shadow, it's colder for longer, is what I remember.
Yeah, no, it's been warm here. It's
Okay,
been warm.
okay. Good.
Last week was only the second time I ever used my snowblower this winter, and it's already
Okay.
all gone. A week later, like we've got grass. It's great. It's great.
All right.
I like
Let's
it.
hold on. I always remember though, like almost every year deep into April, still snowed once, right? So
Yeah. Well, you
not
do have to be the bearer of bad news sometimes. Let's not make that happen. Good
all right.
stuff. Good stuff. Okay, my friends. Lots on the video today with everything from inflation to what builders are doing and what they're hanging on to or what they have in inventory and everything in between. Dion, let's kind of start with the inflation numbers that are coming out with some signs of optimism, perhaps.
Yeah. So we always knew this was not going to be a straight line. And what I mean by that is, as interest rates went up and up and up, and inflation went up and up and up, when we turn the corner, we know that it's not going to just down step all the way, and that is because the policy changes and interest rate adjustments that happened are actually loaded in and push up inflation. So as interest rates went up last year, inflation went up last year because the cost of borrowing money went up, mortgages went up, rents went up, right? So we've had a little bit of a bounce around. The good news is the overall trend is down, and so we've dropped from the peak of 8.1 to towards the end of last year we were at 3.1. We went up to 3.4, and the good news is we've actually now cracked 3. We're under 3 at 2.9 as of just a couple of days ago in February. So that is the good news. Interestingly, just a couple of weeks before that, the US announced their inflation, which was higher than expected, whereas ours is lower than expected. When the US announced their higher than expected number, our bond yields went up and our fixed rates actually jumped a little. So again, no straight line, but the shock of that US number was enough for banks to actually raise 5-year rates by just a couple of bips, not a hell of a lot, but it still was enough to make a couple of people scared, right? A lot of realtors were calling me saying, what the hell's going on here? But like I said, we've just got to hope that things keep going in the right direction, but don't be surprised if we have inflation jump a little bit higher in one of the future readings. It's not a bad thing. As I said, it's just stuff filtering down. Everybody's still predicting, this year sometime we're going to get that first interest rate drop.
Yeah, and even if we do hover at that 3%, that's not a bad thing in knowing where we came from, right? Would you kind of agree with that? Yeah.
Yeah, correct. I mean, there's been some discussion about, is 2% inflation a really good goal? And a lot of people were saying maybe we just have to get used to this idea of 3% inflation and interest rates that are in line with that. But it seems that no, the Bank of Canada, in addition to all of these other, in particular the Fed in the US, they're saying 2% is the number. They're relentlessly pursuing this 2% number. I don't think they're going to ease up on the pursuit of that. Interestingly, just after the Canadian inflation announcement, National Bank came out to say, "Oh well, we think that we could hit 2% inflation by this summer," and I think a lot of people would be very happy to see that. I personally can't see that with all the renewals that are coming up and higher borrowing costs that these households are going to be taking on in the next little while. I think that's quite optimistic. But hey, you know what? If it happens, we'd all be jumping up and down.
Yeah, we will. And of course, from the big picture perspective too, 3% versus 2%, what's the difference? Well, the difference is, salaries haven't moved along with that as well. And the income that individuals are bringing in haven't kept up with, our expenses. And especially with those renewals coming, there will be some tough conversations to be had by a lot of those individuals and what they do. Uh, that's why we host videos like this, so we can, future plan, and we should always be future planning, that kind of stuff. Um, let's talk about some of the renewals that are coming, or the letters that are being sent out by one in particular lender in Scotiabank, and I'm a client of theirs, and I actually had a client of mine reach out to me, Dion, and you might find this interesting, and we can kind of banter about it a little bit. They were curious about if they sold their home and wanted to port their Scotia mortgage. And of course, they
Right.
make the phone call and call the bank and ask the question, "Hey, this is the scenario. I'm looking at selling the home, and can I port my mortgage?" Well,
Right.
sure enough, the answer was yes.
Yep.
However, yes with, or a yes but, I should say, providing the mortgage balance remained the same or increased, which is to say, they would, at that moment, at least the information that they received from the lender, from Scotiabank, they wouldn't allow them to pay it down significantly or any. It had to be at least the same balance. Talk to us about what
Mm.
that looks like. Peel that onion away for us, my
Okay,
man.
sure. So I would say some of that is accurate and some of it is a little bit incorrect. So for the listeners, let me just sort of explain what porting is. And porting is the ability to take the mortgage that you have on property number one and you're going to move to property number two. And it's just basically picking up that mortgage and dropping it on the new property. But in many cases, that number is not going to be exactly the same. You might actually be moving from a $500,000 house to $1 million house. Your existing mortgage might be 300 grand, and you need another, let's say, 200 grand, just to keep the numbers simple. So when you're porting, a couple of things that some people are surprised about. Let's say you just needed the exact same amount. You have your 300, you just want to move it to the new property. A lot of people think, well, I qualified for it already, so there's no requalifying. So, surprisingly, for many people, you actually have to requalify in the same way that you qualified the very first time for that 300 grand. And what people might be surprised about is back in the day, a couple of years ago, they qualified at, qualifying rate of 5.25%. And now they're having to qualify at 7% plus in many cases. So even if they had the exact same financial circumstances, they may not even qualify to port that mortgage. So if you're thinking about selling and buying, don't just assume that you can port that mortgage. Please check in with your lender and or broker and understand the intricacies of that. Now, when you port, why do people port? Well, they want to keep a good interest rate because maybe the rate they got is way better than the market today. And number two, they just want to keep things simple, right? They want to stay with the same lender. But also, they do not pay a penalty, right? As everybody knows, with almost every Canadian mortgage there will be a penalty, be it a 3-month interest payment or an interest rate differential on fixed rates. So porting saves you having to pay the penalty. Now, regarding what your customer went through, your client went through there, you can port the exact same amount. You can port and do a top up for any extra amount you need as long as you qualify. Again, you can port and downsize the amount that you need as well, Gary, but there'll be a penalty. That's all. So, put simply, let's say that on your new purchase, you don't need a 300 grand mortgage. You actually only need 250. Okay. So you go to the bank and say, well, I want to port, but I don't need the full 300. I just port the 250 because I got an inheritance or whatever the case. I got the cash. What will happen is you will pay the penalty on the 50 grand, not on 350, not on 300, just on the 50 grand. So I think that again, your client was probably a little bit, unfortunately, misinformed by whomever they spoke to on the day. You can certainly port and downsize. There'll just be a penalty on the portion that you downsize by. Okay, but you know what? Let me tell you a little bit of a trick that a lot of people don't know. In almost every mortgage you have, especially with major banks, you get a prepayment allowance annually. Okay. And for many banks, that number is, anywhere between 10 and 20%. So let's say in this case, it was 20%. Okay. You got a 300 grand mortgage, you got a 20% prepayment allowable, which is $60,000. Okay. So if you actually pay down your 60,000 of that 50 in this example, that would be within the allowable prepayment amount, right? And you shouldn't incur a penalty. Okay. But here's the kicker. In many cases, you actually have to have the cash to pay that down.
Yeah.
By just telling them I'd like less money on the port, that triggers a penalty, right? So in these cases, when we get involved as brokers, we tell clients this because many times the people at the bank don't even understand that that's an option and there's technicality around it. And we say, look, just go borrow some money from your mom and dad temporarily and pay this down because you don't need that 50 grand. Pay it down and exercise your prepayment option, and then you won't pay any penalty on the 50 grand in this example, right? You can even borrow money from your home equity line of credit to pay down your mortgage using the same strategy. Yeah, you'll pay a little bit of interest, but it's way less than the penalty that you'll pay. So little tricks like this are things that I've learned along the way, which if you didn't know the ins and outs and the loopholes and read the fine print, nobody at the bank's going to go out of the way to tell you, and many of them don't even know.
Yeah, I like it. I like that little mortgage hacks with Dion. I love it. I love it. Okay, and then we've also seen a shift in home equity line of credits, and this is, of course, coming from Bank of Canada and all the governing bodies there in reducing the amount that is accessible to consumers. So, as an example, I'm with Scotia. And I received a letter stating the fact that they would be slowly over the next 25 years. I think you'll explain on reducing what I have in available access to that funds, or the access to those funds, I should say. Yeah.
Yeah, correct. So without going too deep into the weeds here, long story short, if you have a home equity line of credit with Scotiabank in particular, they're the ones who are sending out these notices. They've basically said that they're going to be gradually reducing your limit. So it's not like tomorrow your line of credit is gone, but you might be getting a letter in the mail saying that, okay, we might be reducing your limit, which is currently at say $500,000, down by $500 a month every month going forward for the time that you hold this product. So it's not enough to hurt people. I've always looked at as a line of credit as kind of your first insurance policy. In the event that you get sick or you lose your job or whatever, you have a little bit of financial cushion to fall back on before you have to go into other assets. And so this type of erosion, while it's not great, it's not enough to freak out about. But I will say to those of you who are depending on using those lines of credit for, let's say, a pre-construction purchase that you had signed for a couple of years ago, you better sit down with your mortgage broker and do the math and make sure that by the time you close on your purchase, that you will actually have that line of credit available to you and start making other arrangements if it ends up falling a little short.
Yeah. Yeah. Well said. Good stuff. Okay, let's talk about pre-construction. That was a great segue, by the way. Here's I'm going to share my screen here, and this is something interesting that came out of the Toronto Real Estate Board and their market forecast and outlook for 2024. And this is something that I find intriguing, and maybe there's an opportunity here, Dion, for people to look at. And what we're showing on screen here is back in October 2022. Builders had approximately 3.5 months worth of inventory. Fast forward a year, so just this past October, you can see that has doubled, more than doubled, sitting at 8 months worth of inventory. So what can we expect here, Dion, is perhaps, I'm not going to say builders start slashing prices because that's typically not going to happen. What we might see, Dion and friends, is we might see builders start to provide a little extra bonuses or upgrades and things like that. So talk to me a little bit about what financing looks like from the pre-con environment.
Okay, so I've got some mixed news here.
Okay.
So I've had a lot of clients over the years have some great windfalls with purchasing something pre-construction 4 or 5 years. And then subsequently, they bought for 500, then it's worth 700. They made 200 grand by signing some paper. Fantastic. But you and I have spoken about the fact that, in my opinion, a lot of this is speculation if you don't go out of your way to run the numbers on rental, right? Like, how much will this thing rent for, and if I want to hold it long term. So first, let me go back to your question as to opportunities. If there's this many new construction properties on the market, yes, you might see some discounts, all those upgrades. The challenge there, Gary, is that if some people bought this almost the same property last year at a higher price, then builders are getting sort of kickback from existing owners saying, how can you now sell this property at this price, which is 100 grand lower than what we bought it at? Right. So I've seen these types of issues coming up in the media recently. The other thing we need to talk about is appraisals. So I'll give you
Yeah.
an example as of this week. I have a client who, admittedly, she got caught up in the frenzy that was 2021, 2022, and she bought a pre-construction condo on assignment. Okay. And so she ended up paying a little bit more than what the original buyer paid. It's it's under 400 square feet. It's around 360 square feet. This is one of these small bachelor condos, and 360 square feet, paid $540,000.
Mm.
So that's $1,500 per square foot. When she contacted us and I saw the numbers, and by the way, we weren't involved at the time she signed. We're involved now at the time of financing. When she sent the numbers in, I did the math and I'm like, wow, at $1,500 a square foot, I said, I can nearly guarantee that this appraisal is not going to come in, unfortunately, right? So even before we sent the appraiser to the property, I'd done some quick research and I said, look, hopefully this thing comes in somewhere around 4 to 430 was my guess. Sure enough, it came in at 420, which is around $1,200 a square foot versus $1,500 a square foot. And so, our clients paid 120 grand more than the appraiser was able to support on the value. So fortunately, we are able to access equity from other property to help close this transaction. But I know for a fact that there'll be other people in the same situation on the same development that will not be able to close. And this comes back to, what is this potential glut of inventory? Well, what happens when they don't sell, Gary, is that the builder has to take that back onto their books and then try to resell it. But again, let's just say this client couldn't close. Let's say we weren't able to help them and they couldn't close. Well, what would happen is that the builder very well would have to hold on to that property, maybe rent it long term, or take it back out to market, sell it at the same price to somebody else. But I can't see that happening, and therefore potentially have to put forward these discounts, right? So, yeah, that's what I'm seeing happening right now.
Yeah. Yeah. And it's interesting too, because we are seeing, of course, and we've talked about this, on one hand, you and I even have talked about the lack of new construction. Yet the data is showing us, well, the inventory of new construction is increasing. However, I think you would agree that it's not increasing at a rate that's going to bring housing prices down. And that's what the government of Canada is looking to do as well, right?
So that's a big part of it. But also, builders have built what they have been incentivized to build, right?
Yeah.
From the market perspective, which is smallest condo possible in many cases. And if we look at that 8 months of inventory that's available, I'd be very interested to drill down onto property type. And my
Yeah.
guess would be, Gary, that 70% of these properties are likely condo style properties. And in terms of what the market needs, we need single family or at least 3-bedroom type properties that can accommodate families, right? And so the challenge is that, again, we can't blame the builder for building what they were told to build based on the economics. But now, based on what the market needs and what the government is trying to create, we're going to have to go in a different direction. And yeah, a lot of investors have just said, especially in the last year, we're not buying because we can't make condos work at $1,500 a square foot. And so, they're just going to sit there for a little while. And I know you and I have spoken to these pre-sale condo realtors who have really said that stuff has just been sitting, and they understand why. You and I
Yeah.
understand why investors are sitting out right now as well. They just can't make the numbers work. They only just used to make them work. But when they went from 1,100 a square foot to 1,500 a square foot, Those numbers just don't work.
Yeah. Okay, my man, you brought up a great point, and I've been saying this. We need this type of product here in the GTA. So my business partner that we do a lot of videos with in Vancouver, Roland Kim, go check out those videos. Excuse me. He's showing me some of these new builds and right across wherever through BC, and it started. It didn't just start. It's been going on for many years. We'll have builders build a beautiful looking, what looks like a single family home from the exterior. Stunning, great, great features, everything, and it's actually a 2 unit or in some cases a 3 unit home.
Mm. Okay.
And I've been saying we need that here in the GTA because these homes are, like I said, are stunning. 9 foot ceilings in the basement. So when you're down in the basement, it doesn't feel like you're in, a classic 1970s dungeon or anything like that. And that's a big market for them. And it's not just investors gobbling these 2 unit or 3 unit homes. It's families, it's multi-families, or generational families, and that type of thing that's looking at that. That, my friends, builders will catch on here. Our GTA builders will catch on as the market demands it. And in some areas, we know that they are demanding it, Dion.
So I think, that comes down to two big things that come to top of mind here, which are, again, economics and zoning, right? So I remember when I started my mortgage brokering career in around 2008, 2009, and I was making these deals work in Toronto. I went to visit some family who lived in Vancouver. And, being in the industry, I did a good little bit of digging around at pricing. And I was like, oh my gosh, how do people make these numbers work? As from a mortgage broker, from total debt service ratio perspective, how in the world are people making these numbers work? And we're talking like 2008. By 2012 to 15, Toronto had unfortunately caught up on that total debt service ratio issue, right? And we were, and whereas Vancouver used to be astronomical challenge to qualify, Toronto is basically equal as of right now, very much equal. And the challenge is only up until only very recently, we only allowed single family zoning in most locations, right? And I feel like British Columbia was ahead of us in zoning. Maybe not Vancouver itself, but places like Kelowna or outside. And they said, okay, well, let's allow people to build these 2 or 3 unit buildings. And like you said there, aesthetically, they look like a single family home, which I think is important because I don't think people want to see big square boxes that are obviously apartment buildings on the street on which they live. And I hope that with the zoning changes that have been allowed in Toronto and now rolling out across the province, that we talked a couple of weeks ago about this new catalog of pre-permitted buildings that the government is basically saying, okay, if you build this particular building plan, then you won't have to go through all the same permitting, which will allow fast track of construction. My hope is that when those come to market, and apparently this catalog is available later this year, hopefully they're in line with what you're talking about there, Gary, and that they're aesthetically pleasing and allow for those 2, 3, or maybe even 4 units as well. I don't know if I've asked this before, but one of the stories that I heard about why builders don't finish the basement is because they need to give time for the foundation to settle, and they can only finish the basement in, say, 6 to 12 months after the registration of the building has happened. But the fact that Kelowna has things like that tells me otherwise. Is that, like, what's your understanding there?
Yeah, and of course, I am not a construction expert. However, I, many years ago that was definitely the case, right? The whole building, the concrete that was poured was settled, and you might see some cracks and things like that, and they'd have to go in and repair it. However, it's my understanding that with today's building technology, and we call it ICF, where there's insulation on the outside and the
Mm.
inside, and they pour the concrete down the middle, and the insulation stays. Um, our building techniques are far superior than where they were 10 years ago, 20 years ago, and of course, much longer than that. And we see custom homes, new homes, you can have them finished by the builder. I just don't think that's an issue anymore. Prove me wrong. Yeah, I might be wrong. However, I think there's a big opportunity for builders to do that, and we can if we're throwing out ideas, one of the ideas also that I had is the local municipalities that, of course, that approve all the developments and the site plans. Why not say to the builder, X amount of percentage has to have more than one unit? Meaning, if there's 100 homes, 20%, make it 40%. It doesn't matter. Of the homes have to be multi-units, 2 units or more. And we can talk about what the parking looks like and everything like that, but we'll figure that out. We just need to. I mentioned this on a video not too long ago that if we want a different outcome, we got to be doing different things.
Yeah, 100%. And yeah, I mean, if there are any contractors or builders listening who can set us straight on this whole basement finishing before 6 months of settling, please let us know. I'd love to. I'd love to get some actual professional advice on that. And yeah, I think what you said there, Gary, about the incentivizing developers, and I can see the government incentivizing developers in order for them to hit their targets for housing as well. So yeah, that all makes sense.
Excellent. Excellent. Okay, my friends, we covered a lot today, and do reach out to Dion and I. Throw it into the comments or message us. We are always engaging with our friends online, and ask us questions too. If there's something that we haven't covered in the past, or you want us to provide more clarity and detail on, we're happy to do so. Dion, how do we get a hold of you?
Yeah, kangamortgage.ca or Instagram at the Dion Beg.
There you go, my friend. So for the Dion Beg, I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.